Welcome to another edition of Talk Stocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Michael Williams, Executive Chairman with Aftermath Silver. Trades on the TSX Venture Exchange with the ticker AAG. How you doing today, Michael?
I am doing well. Markets are up today, so I'm happy.
Hey, there you go. Well, hey, really great to sort of connect with you. We've got some friends in common and whatnot, but I know you've got a great sort of background in sort of mining and resource and how to take a resource all the way through from discovery off to selling it to a major. Pretty interesting stuff. So we'll kind of unpack what you have going on here with Aftermath.
Yeah, please do. Yeah, well thanks for having me on.
Yeah, no worries. First question. What's the name and stock ticker of your company?
It's Aftermath Silver, and it trades on the TSX Venture under the symbol AAG. And we also have an OTC QX listing, which I believe is AAGFF. We also trade in Frankfurt. I'm trying to remember the symbol there. Quite a following in Europe, so they asked that we get the Frankfurt listing.
And what's the vision for Aftermath?
Well, originally I wanted to build a pure silver company. Silver's a funny metal. It's hard to make economic from a mining company point of view. If you look at the gold space, I would say there's probably 400 really good gold companies worldwide that your listeners should look at. There's probably only about 25 of us in the silver space that have good management, good assets, ability to raise capital, and that potentially could go into production or be purchased by a producer. So it's a tough space to get into in the sense of being able to demonstrate that you have a viable project. But at the same time, if you are in the silver space, you tend to hit above your weight class because a lot of people really like silver, and a lot of the people that follow precious metals tend to follow both gold and silver. So if you look at Aftermath, whenever silver moves, either way, we tend to move with it. We're one of the higher profile silver companies. I think that's predicated on maybe management's background, but at the end of the day, it's predicated on results, which we've been successful at. But we also have large resources, which I'll get into in a second with you. I think we're one of the bigger undeveloped silver resources. But having said that, at our flagship Berenguela project, although we have a lot of silver, we also have a comparable amount of copper. And then we have a metal called manganese that it's a different metal than we're used to dealing with. Manganese historically has been used in the steel industry, but last 15 years, what we're seeing, and especially the last 10, there's now a utility for electric vehicles. It's used in car batteries. So we potentially have, it looks like, based on our resource, one of the largest manganese deposits that potentially could be used in that space. And the good thing is, there's certain criteria that we can get into that you need to meet to be used in the electrical vehicle side. And so far, I think we've crossed that Rubicon. We're there. We just need to expand the knowledge base from there on the metallurgy. So you asked me what the plan is. Berenguela is now, I've gone from a pure silver company to having a polymetallic deposit that I think is one of the most interesting out there, and we'll let your listeners decide and viewers decide if that's the case. But no, I think we're well positioned. I believe we're heading into a bull market. I can give you several reasons for that, and it's sort of the market. I've been in the industry 30 years. I've seen two bull markets, and I believe this will be my third. But it could be the most dynamic for a myriad of reasons.
Approximately how many shares are outstanding?
There's 280 million shares outstanding, and I think it's 347 fully diluted. I should point out, though, that our key shareholder, Eric Sprott, who's a preeminent precious metal investor and has since also started to follow the manganese space, he controls 70 million of those shares, or 25%.
Approximately, what's your market cap and cash position?
About 150 million shares market cap. There's $12.5 million in the treasury. We also have 3 million of in the money warrants that expire within 30 days. So I anticipate we'll have another 3 million. Most people will exercise those warrants. We have warrants coming in every day.
And what's two or three sort of short-term catalysts that we should look for over the next 6 months?
Okay, well, over the next 10 days, 2 weeks, there should be two news releases outlining our final 25 drill holes from last year. Following that, I'm going to update the 43-101 resource. So you'll see a new resource out by the end of June. And then we will get back to drilling. We had some really good success with our copper holes recently. The last hole we announced was 156 meters of 1.12% copper, 290 grams of silver, and 7% manganese from surface. But the key thing there, this is Berenguela, which I'm referring to as what we call a carbonate replacement deposit. And I always tell people to think of it as like a giant sugar cube. And if you poured hot coffee on a sugar cube, it dissolves. The same thing happens with a CRD, but rather than sugar, you have carbonate rocks like limestones. Fluids come from a source, and usually the source is like a porphyry. So we've got a porphyry, we think, close by that delivered those fluids that form the CRD. And now we're starting to hit some mineralization that indicate that thesis would be correct. We want to follow up on that. Now, just because you have a porphyry to form your deposit doesn't mean it's economic. It could be too deep and it's uneconomic to get out. Or the other scenario, sometimes these things are close to the surface and over millions of years they're eroded and it's not big enough to be an economic ore body. But having said that, we have an opportunity to see if one exists here. And we're seeing early indications predicated on the drilling that's been announced that might be the case.
Excellent. Well, thanks for a little overview and answering those questions. Maybe we could get into a bit about your background.
Well, I hate to say this, but I'm almost 30 years in the mining industry. I stayed true to mining and more in the junior space. My background's capital markets, so I've been fortunate that I've been involved in some successes. And there's one thing in our industry. If you do have a success, for instance, you mentioned Underworld. Underworld in 2010, we made a discovery in the Yukon that kind of kicked off that whole Canadian land rush. I think, if my numbers are correct, there was 300 companies followed us into that region, and it was the largest land rush in Canadian history. But if you look at the tea leaves now, 10, 12 years later, there was only two of us that monetized those assets. There was Kaminak and Underworld. And we were fortunate enough to sell that asset to Kinross. They really liked it at the time. It's still not in production. They're part of a syndicate that's trying to move it forward. At these gold prices, it might work. But, Yukon, it's all about infrastructure, and that was the issue going forward. So that was a big success. Now, it was a grassroots discovery. And I was fortunate at the time. I was working with two very competent, very well-known geologists that named Rob McLeod and Adrian Fleming. And they came to me and the board and said, guys, I think we found something special. And what I always look for, I was a founder with those two guys. I always look for the geos to agree. A lot of times prospectors come to us and they throw a rock on our desk and they say, hey, look at this. And we go, what? Well, it's something like this rock here. And they'll say, hey, this came from here. But 9 times out of 10, or probably more like 99 times out of 100, it never materializes. A fellow named Sean Ryan came to us with a memory stick, and he did tremendous work on soil sampling, and he showed Rob and Adrian a 3 by 7 kilometer soil anomaly with certain types of signatures. And they both said they were pounding the table. We have to get this asset. And literally 24, 36 months later, we'd spent 20 million into the ground and we sold it for 139 million. Every shareholder in that company did very well. So I take a lot of pride in that, but I quickly realized that's a grassroots discovery and they're very difficult to make. So I switched gears a little bit and focused on development stories. And like we have a lead zinc in Australia, some Mexican exploration assets, but the real flagship lies in Aftermath Silver and Berenguela. There's some secondary projects that I think are good, but this could be special. It could be a tier one asset, and I can run you through it. But that's kind of my background, and I like the space. It's sometimes very difficult, but those of us that stay in it, I've had my best successes coming out of bad markets, and I really think we've been in a bad market for. I'd go back to 2008. There were some spikes in the meantime. We caused that one in the Yukon I just referred to, but it hasn't been easy. But I think I can see some indications that we're heading into one of those special markets.
Excellent. And maybe you could explain how Aftermath came to be.
Well, Aftermath was a spin out of another company called Full Metal Minerals that had its hands full in Alaska. And at the time, we were actually looking at building a lead zinc company because there were 3 or 4 big lead zinc assets that were going out of production. But lead zinc is a very difficult commodity. So I switched gears and I thought, okay, there a lot of the silver companies are becoming gold companies. There's going to be, nature abhors a vacuum. So I saw an opportunity on the silver side. So I started building a company. I put in a small asset, and I was fortunate enough. There's a little trick in our industry is you always want to hire people that are smarter than you. So I brought in the CEO, Ralph Rushton, and Ralph is a former Anglo-American geologist, spent 15 years with a major, and he spent 15 years on the junior side, largely with a well-known person here called Simon Ridgway, and worked for his group of companies. And the last 5 years, he's been working with myself as the CEO of Aftermath. But with Ralph on board, we were able to build up the team. And then we went after the Berenguela project in Peru, which is the flagship. And in between that, we also picked up another interesting asset in Chile, silver dominant, called Chayacoyo. So that's kind of how we put the company together. We were fortunate to have Eric Sprott as a shareholder. I think someone with Eric's gravitas, he brings a lot of credibility, and he's increased his position. I can get into that a little later. But once you launch and your management team's respected, we've raised quite a bit of money and we've had quite a bit of success. We just need a market.
Well, you're chomping at the bit to get into the assets. So why don't you walk us through the sort of property portfolio that you've got with Aftermath, and maybe you could explain which is your flagship, what the resources that might be at each of them, as well as some of the catalysts.
Certainly. So I'm going to walk you through just from the timeline. We first picked up a project in Chile, Region 2. It's about 2.5 hours by car off from a town called Antofagasta. That's called Rationale. So Rationale, it's 16 million ounces measured and indicated and inferred. I should break it down for you. I'll get that in a second. But that was the asset that kicked things off. Now, the thing with that asset is I think we don't see a lot of upside for adding additional ore. But what we do see is there's a mill 13 kilometers down the road that's under capacity. So I think for the right group, it's not a core asset for us. It's given our scope at Chayacoyo and Berenguela, and so we've got it. We're talking with several companies about their purchasing it or earning in. Our second asset is Chayacoyo. It's in Region 1 Chile in the Atacama Desert. It is, I think it's on its own right, a really good silver asset. It's currently 45 million ounces of silver. I think it's 35 measured and indicated and 10 inferred. So we think there's a lot of potential to grow that asset with further drilling. Uh, it's also open pit. I should mention Rationale was open pit. When we were putting the silver thesis together, our our idea was to only focus on open pit or potential open pit silver assets, and Rationale, Chayacoyo, and Berenguela all fit in that category. And I can walk you through that. So Chayacoyo, if that can get to 75 to 100 million ounces, I think it's a silver dominant deposit, should be open pitable. There's a good chance a company could put that into production. We would need to do the PEA, PFS, of course, to demonstrate that. But it's got all the makings of a good mid-tier asset. But because we had that, we picked it up from a company called Mandalay for 10 million US. They put 33 million US into it in both money in the ground and acquisition costs. So I think we got it at a significant discount. They were leaving Chile at the time to focus on production assets. So it was a good opportunity, but that allowed us, and that's when Eric Sprott first took his interest in us, predicated on the resource at Chayacoyo. I levered that into a deal with Silver Standard Resources, now SSR as they're now called. SSR historically had been a silver company, but they were in the process of merging with a gold company out of Turkey. And so Peru wasn't a key asset for them. And I mentioned before the metal manganese. So manganese used to be, when geologists were out in the field, they'd find, say, a copper asset and it had manganese. A lot of times their head offices would go, look, it's metallurgically complex, go on to something else. So this Berenguela project, I think it had been known for a long time. It had a really interesting resource, very robust, but because it had manganese, a lot of people couldn't get the recoveries they needed from the metals to justify taking it further. So, we looked at it initially as a silver play. I didn't realize the scope of the manganese at the time, and I'll walk you through that resource. But as it's turned out, it's one of the bigger silver assets, and I'll give you the numbers right now. Bear with me. I want to make sure I'm accurate on the resource. But what really changed is the utility of manganese. So in the last 10 years, it's used in the EV industry. So now there's only a few of us with this type of deposit, and there's lots of manganese globally. It's largely used in the steel industry, but the manganese in the steel industry hosted within silica, ours is actually an oxide. So only oxide manganese or carbonate has the right chemistry to use in batteries, and it has to get to 99.9% purity, 99.98 technically, but we're at 99.9 on our initial metallurgical work. So it looks like we might have a product that can be used in that. There's only a few of us, and if you base it on our resource, it'll be one of the industry leaders globally on that front. So this is the current resource, and bear in mind, in another 2 months, 45 days, to see an updated version with an additional, I believe, 140 drill holes added to it. We're going to take some of the inferred and put it into measured and indicated because we've tightened up the drill spacing, and then we've drilled at some of the edges of the deposit, so that should increase. But we're looking at 101 million ounces of silver measured and indicated, with a further 38 million in inferred. So that's a big resource. That's one of the biggest, just as a silver. But we also have 55 million tons of 0.7 copper and 55 million tons of 7% manganese. So the other critical thing is, and we're so far down the road on this now, I think we know more than any other company that's ever held this project. The metallurgical process we're going to use is called hydrometallurgy. And I explain it like this. Traditionally, you would have used mechanized milling, which is you're crushing ball mills to bring the rock down. Then you float the metals and then you concentrate them. We are using chemicals to do that process to separate the copper, the silver, and the manganese. And it's in our press releases. We're in, I believe, silver was in the high 80s for recoveries, manganese was in the 90s, and copper was in the 90s for recoveries. So we can technically produce three products. We will produce the silver doré through a process called Merrill-Crowe, and then we produce copper cathode, produce the copper sheets, and then we produce a product called manganese sulfate, which is the high purity manganese used in the battery chemistries. Crystallized, maybe we convert it into a metal, and then it's sent to the refinery. And maybe at this point I'll touch on what's happening in the industry. Especially in critical metals, and make no mistake about it, if you look at all the battery chemistries going forward, they have an M in them for manganese. And the reason that manganese is critical is it does several things. One, it's the stabilizing component in the battery matrix on the cathode side. Number two, it gives higher density. So you get a little bit more power out of it than you say would by using cobalt. And it also decreases the combustibility in the battery pack. But I think the most important reason, and the reason that everyone, the Chinese, Europeans, Americans, they all use manganese, it's currently trading at $2,500 a ton. Cobalt's 10,000. And the other issue on a social license, a lot of the cobalt's mined in the Congo. I hesitant to say Democratic Republic of Congo, but DRC. But that so when you're looking at raising capital for these projects, we get a lot of money from the private equity groups, and the private equity groups get money from the sovereign funds and from the university endowments. And the university endowments they will not give money to the private equity groups that are doing practices that they don't believe meet their ESG standards. And taking metals from Congo, I think, is one of those. And they want us to be as green as possible when we put these projects into production. And I can walk you through how we're going to deal with that. So it's vital going forward to have those people on side. But what you're saying, China produces 93% of world's critical metals now. United States needs access to them. The European car companies want their own sources. They do not want to be reliant on China. So you see a bifurcation in the markets. That manganese product in China goes for $1,800 to $1,000 a ton, but you can't be reliant on it. By the time it gets to North America, it's $2,500. The United States government is giving grants to companies like us to refine in the U.S. An example is Element 25, an Australian manganese company. Just did I think it's a memorandum of understanding with the Louisiana and federal government for a $280 million grant. If they ship their ore from Perth, unprocessed, to, I'm assuming New Orleans or Baton Rouge, but it's going to Louisiana, and that'll be the new model. So the U.S. will help us put these big projects into production, but in turn, they want our commodities used for their automotive industries or high-tech industries. So we have an interesting suite. We've got silver, copper, and manganese. As we all know, copper is the linchpin to the energy transition. Without copper, there isn't. There's a couple numbers that I always like to throw out at people. One is, I think there's been 292 discoveries since 1990, only 10 in the last 10 years. So we've got a dearth of discoveries. Demand is increasing. and we don't have enough above ground supply. So copper is, being a bit flippant when I say this, but it's going to be the new oil. And speaking of the new oil, silver, it has the second most uses after petroleum of a commodity. And 55% of silver is now industrial. And I know that's one of the questions you probably wanted to ask, the industrial uses of silver. I see it going up. It's used a lot in solar panels, and solar panels are the number one use of renewables, and it's the number one use in the United States and China, which are the two biggest markets. So you've got this duality with silver. We've got it as a monetary vehicle with gold, and now we've got industrial uses. And I think, I was looking at silver just got knocked down or pardon me, gold or copper from $5 to $4.10, largely with the tariff situation. Silver followed it down, and gold was going up, silver was going down, and a lot of people were, that doesn't make sense. I think it got knocked down because they viewed it as an industrial metal, not a monetary metal. Still, now it's come back. And, one of the things that I always look to on the monetary side, the silver gold ratio. For every ounce of gold, how many ounces of silver do you get? Now, this is a generalization, but it'll give your viewers an idea. Usually, historically, it's 50 to 1. It has gone into the 30s. Right now, I think it's like 89 to 1. It might even be over 100 to 1, which I think that ratio is a lot. It's too extreme. I think silver has a long way to go without gold necessarily moving. So that's why I'm very bullish on the commodity. Now, our largest shareholder, Eric Sprott, I would say he's one of the top. He's one of the top silver investors worldwide. He told me the other day that he expects silver to be $50 by the end of the year, and he could foresee at some point silver going over $200, and nothing more than predicated on the gold silver ratio. And one thing about silver, why I really wanted to get exposure to the commodity, because what you do is you offer investors a lot of leverage. I always say, what's gold trading at? 3,200.
3,200, yeah.
Yeah, so which is all time. Like, I never in my career, when I started, gold was 400. I'm dating myself, and I saw it go down to 280. But at the same time, gold to double from 3,200 to say 6,400, that might happen. It's not outside of the realm given the current environment we're in. But at the same time, the odds of silver going from 32 to 65 or 70, they're not bad. Like, I can see that. Being what silver means to our deposit, I'm thrilled that silver's in the 30s. I originally modeled it to, what I do is I don't look for the upside. I look for what happens if the metals pull back. Will my deposit potentially still work? And we looked at silver at $20 and felt comfortable enough that, given what we had, we thought that the deposit could be robust enough. We could deal with that, and we were potentially open pitable, so our operating costs potentially are going to be really good. So that all helps, and that's what we look for moving forward.
And so you're talking about this Berenguela, is that how you say it?
Berenguela. It took me a couple months.
Berenguela, there we go.
I had the Spanish people taught me Berenguela.
There we go. And so that is in Peru or Chile?
No, Berenguela's in southern Peru. It's about 2.5 hours out of Arequipa. It's fortunately we're close to rail, and I'll tell you how that's going to be critical. We're only 6 kilometers from it. Looks like an undercapacity rail line that goes to Arequipa, which we can use it as an industrial area, or we go to the ports with Matarani same day. Now, the thing with Berenguela is it's at 4,200 meters. Now, 4,200 meters, There's lots of mines at 4,200 meters or that or higher. But the process we're using, I mentioned it uses chemicals. If we need to get the boiling point of the solution above 80, we need to get it at 92 degrees. I can only get it at 87. Physics dictates at that elevation, you'll never get the fluids above 87. I couldn't even give you a hot cup of tea or coffee. It would be lukewarm. So, you're welcome to come. But at the same time, so you've got two choices when that happens. We can either pressurize the system, which would allow us to raise up the boiling point, but that'll cost significant capital, and this is not going to be a cheap project to put into production. We're anticipating a capital cost of between, call it $750 and $1 billion. Now we'll have to have the economics to justify that size of a project, and that'll come out either later this year in a PEA, preliminary economic assessment, or we're looking at going straight to PFS Q1, Q2 of next year. And the reason we can go straight to pre-feasibility study is all our metallurgical work to date, done by Kappas Cassidy of Nevada, very renowned metallurgists, are that their work is done to pre-feasibility standards, which is a lot higher than PEA standards. So we're working on some things in the background to see if we can get there quicker. And it looks like there's a good possibility. Expect an announcement a little bit later whether we can do that over the next, call it 90 days.
In terms of typically, like when you're dealing in the mining, the exploration side of things. It's what type of work you're going to do, how much drilling. You've talked about a couple of catalysts, new resource, perhaps a PEA or a PFS next year. What sort of exploration plans do you have for the balance of the year?
Well, just before I answer that, I will say this, that because we have that rail there, we're looking at the economics of, we would crush the ore on site, you pull sulfuric acid onto the rocks, you produce a solution, then you use Merrill-Crowe to produce silver doré. Then we would make copper cathode by taking the remaining solution, electrowinning it, and then we would remove the deleterious elements to get to 99.9%, crystallize it. But we think we'll do that at the coast. We're going to crush the rocks, put them on the train, process at lower elevation, so it avoids the issue of having to pressurize the system. So as far as drilling goes, if we go to PFS, we'll do some geotechnical drilling, which is just so they can see the angles of the pit walls and such like that, the engineers. But we'll also do a few holes for the hydro drilling. But the most of the drilling, there's 42,000 meters in this deposit. I would suggest, looking at our resource, we're comfortable that you have enough ore for a mine. Now, that's what the PEA and PFS determines your mine life. But I'm sensing, given our resource, if you look at it, it's big enough. Now, we might follow up on those high-grade drill holes that I referred to that we hit last year. So we might do further drilling on those eastern holes, where we're hitting over 150 meters of 1.1% and 100 meters of 1.2% copper with really great silver. And it starts at surface, as does the whole deposit. But 4 kilometers from Berenguela, we're seeing copper at surface from our sampling up to 2%. But what we also have is a coincident electromagnetic anomaly sitting right below it. And that's one of the first things you want to drill, are your coincident anomalies. We could have a skarn deposit potentially 4 kilometers from Berenguela. And, one of the questions I'm always asked is, well, are you planning on putting this into production, or do you want to sell it? Historically, the management team, we've always been very good at being able to enter into M&A activity. That's always a goal. But the secret with the M&A side is you have to be able to put it into production. So that's what we're looking at. We're hiring currently, bringing on some engineers, mining engineers, chemical engineers, processing engineers to help us do that. And you'll see that that's why one of the things we're looking at is going straight to PFS. But before I can do any M&A activity or even look at going, I need to know, do we have a porphyry or do we have a skarn? So you will see drilling in those areas. Interesting thing about the skarn, it's located close to a magnetite mine, and the geologists will tell you that when you see magnetite and you see skarn mineralization, magnetite's one of the minerals that's associated with skarns. So it could be part of the same system. So we're very optimistic that we have a good possibility of finding something there. So you could see some drilling in that either later this year, early next. We're just permitting that area. The area to the east, you could see drilling as soon as June, might be in September.
Now, what about your other projects? You've got two others. We've talked quite a bit about Berenguela. Thanks
Yeah.
for giving a good overview on that. Sounds like an exciting project, development stage, some exciting economics to be shared in upcoming reports. What are you doing at your other two projects?
Well, Chayacoyo, if we didn't have Berenguela, we would be drilling the heck out of Chayacoyo. I'd like, once again, it has potential for open pit. I'd like to try double the resource and then look at the economics of that project. So I'm sort of using it. I tell the shareholders, look at it like a warrant. Berenguela is our main asset, but at the same time, if something happens on the M&A side, knock on wood, or we decide to put it, there's a good chance we could spin out Chayacoyo. We were approached the other day by a silver producer, just wanted to talk potentially about optioning it. So there, we could look at that. We could look at a joint venture. My druthers is we own it 100%. If we get into that silver market that Eric Sprott was referring to, from the current 33, I think it needs to break 35. I'd value your opinion on that. But if it breaks to 35, a lot of smarter people than me think it's going to 40 or 50. I think you'll be in a really frothy silver market. And when, in a bull market, when gold runs, silver gallops, I expect that to happen. So I will start drilling that silver asset. So I'll have silver results coming out of Berenguela and silver results coming out of Chayacoyo. So, it'll be a double-barreled approach. I will put my foot on the gas.
I like that. So what do you say to people in terms of why they would consider investing into Aftermath? Is it really kind of the leverage to the silver price because you actually do have resources in mineable sort of jurisdictions that you're advancing along to sort of answer the economic question? What's the big reason? Why do we have to own Aftermath?
Well, because I say so. No, the reason I think my reasons are this: we have, if you look at our resource, I think we've de-risked it geologically. There's enough copper, there's enough manganese, there's enough silver to be considered potential for a mine. The economic reports confirm that, but I think people that understand the industry can look at what we have. Just as a silver company, we're one of the biggest undeveloped silver assets, and then you got an equal value of copper, and actually with today's manganese price, you've got a significantly higher value of manganese. So you've de-risked it geologically. Now this ore body comes right to surface. This deposit comes to surface. And so you've got to think, and it's a perfect shape for open pit mining, and it lends itself, the strip ratio will be excellent. And I'll have it for you at the PEA, but we're anticipating it's right there. I kind of joke, I need to put sunscreen into the budgets because the ore. If I showed you a picture, it's like black rock. So it'll have an exceedingly low strip ratio, which means from an engineering point of view, de-risked. You don't have to worry how we're going to mine it, or is it going to be expensive mining. I will demonstrate shortly that it won't be. Um,
So
but
do you I know it's hard to compare to what you did at Underworld. It's a bit of a different market, but you're able to go from discovery through to, selling to a major. Do you like the odds with your portfolio here at Aftermath that you might be able to strike it rich again for us shareholders?
look, it's tough to strike lightning twice, but we got lightning rods out. I think given what we see, and the third tenet is we're advanced on the metallurgical side. So for the shareholders, we've taken a lot of the risk out of the project. We're trading at 150 million market cap. I believe, if every chairman or CEO, if they don't believe they're undervalued, they're probably not doing their job. But I think there's a lot of upside, yet I've mitigated, in my opinion, your downside. And I think this is going to be Underworld on steroids, just given the scope of what the resource and where we sit in the manganese silver markets. To put it in a perspective, and I can't stress this enough. There's only a few manganese deposits globally that are oxide or carbonate, which work in the batteries. And we've already demonstrated that we can get to that purity level. We need to ramp it up now, to scale it up. But we're almost there on Metwork. After our next economic report, I believe 85% of Metwork will be completed. You've got something that people will want. We've already been approached by car manufacturers. They're interested. They need to get the specifications of the product, but there's only a handful of us globally that have this type of resource, and we either have the biggest or one of the biggest globally. So anytime you have the biggest of something, it's good. And then you've got the silver and copper to go with it. So they offset a tremendous amount of the costs. So that makes it very attractive, And
Do you
look,
have a data room? Have you started a data room?
we have an internal data room. You know what? I think there's some tricks to maximizing the value of your company, and I say tricks. It's not really tricks, but there's some things you should do in order to maximize value, and I'll tell you what they are. One, you want the guys that would buy you. You have to have enough data in the public domain that they can model your deposit themselves and reach a decision. They don't want to look at your 43101 and 100% rely on it. They want to know exactly. So you have to have all the drill data out there. But one of the other things is you need to use people that they respect. And by that, I mean that you need to use engineering companies, environmental companies, consultants that do your work that you can put across the boardroom to their engineers and their business development guys. So we use people like WSP is doing our engineering work, Capus Cassidy, the metallurgical work. They're all recognized like global leaders in their field. Makes my job easier because they're not relying on an unknown engineering firm that, for want of a better word, doesn't carry the credibility that these larger firms have. The downside to the larger firms is they're not cheap, and they take a lot of time to bring them on board because they have a lot of clients that are certainly senior to us. So our PEA, PFS should have been out a year and a half ago. COVID and the availability of the technical teams at the engineering firm slowed us down. So yeah, we do have, we don't have a formal data room, but we have enough data out there. We could put one together very quickly. But I don't want to entertain anything until I've drilled out the eastern flank and then the skarn, and then know exactly what the economics are. I think there's a lot still on the table. I want to demonstrate that.
Approximately, what's the insider ownership? What percentage is owned by insiders?
I think we're about 3 or 4%. We were significantly higher. Eric Sprotts diluted us down, and
And how much does he own again? What percent?
Eric owns 25%. I believe it's his third largest holding. So, just to give you a bit of flavor on what he's thinking, he originally approached us, and Eric owns a lot of silver companies. Eric is a big silver bull. He understands the space, done exceedingly well on it, as well as gold companies. But Eric originally owned us predicated on what we had at Cash or Chayacoyo. But then when we picked up Berenguela, he increased his position to 19.9. Through further financings, he ended up with 14.4. Last September, he approached us after Ralph Rushton gave a presentation at Beaver Creek, the CEO, and asked if he could go to 19.9 based on what we'd done on the silver side. And then I got a call from Eric a month later, and he very self-deprecating individual. It's very funny. He said to me, he goes, "I guess I should have done all my due diligence. I did not comprehend how much manganese is in your deposit, and I certainly didn't understand the manganese market. I can see this could be a very special opportunity." So he asked if he could go from 19.9. He put a further 10 million into the company in last November, because of the manganese, which I thought was very interesting. So Eric now owns 25%, which I think if you look at his holdings, is he doesn't do that very often. So that you could see our market our valuation went up. A lot of people that follow what he does realized that, look, if Eric Sprott is now talking about manganese, he's always talked about silver. This is an opportunity that should be looked at.
If there's one message that you want to leave our Talk Stocks viewers with as a takeaway from this interview, what would it be?
Oh, that's a good question. I think from what I see, we're heading into what I am going to consider is going to be a very good, prolonged bull market. I don't expect it to be the shape of a hockey stick and go straight up, but I'm seeing indications of generalist funds now coming into the sector. The people that are starting to take interest in us, I think a lot of the producers are now starting to trade at decent valuations. Their earnings are coming in and they're all strong. I think that's positive. And this commotion with Trump, someone said to me the other day, Donald Trump could be the best thing that's happened to mining in a long time. And I'm starting to believe that. China is now undergoing more quantitative easing, more money going in. So that's why I think you're seeing silver going back up. You're seeing copper go back up. So there is an opportunity that maybe we haven't seen in a long time. I think it's our day in the sun is coming up, and you want to be in the space, and we can afford you an opportunity that you won't have you're not totally exposed because of the fact we've de-risked this project, and we've got a secondary asset that for most juniors, there's 2,000 odd juniors globally. There's probably 150 with good projects. That project in and of itself you'd be considered a good junior company. So we've got a lot on the go. And the other thing is, manganese really hasn't caught on as a go-to metal. People don't understand its place in the critical metals. One of the people that follows that sector very closely said to me the other day, there will be no EV battery market without manganese. So we've got a commodity that it's not you might want to have, you have to have, and we've got a lot of it, and we think we have the right type, coupled with copper and silver. So someone said to me that, and it was a technical person. They said they described the deposit as a freak, and by that they mean it's big and it has grade and it's got an unusual suite of products. So I think we've got something special, and people can still invest and partake in that.
Hey, Michael, I really appreciate you stopping by and giving us a chat. You're one of the rock stars in our industry. Congrats
Thank
on the
you. I appreciate
success
that.
congrats on the success you've been having with this. You've now got the market cap, I think, on this ahead of the market cap that of the sale price of Underworld when you
Yes,
had
yes.
that win. So congrats on that. We look forward to sort of continuing the coverage with you here. Hopefully, we can touch base each quarter and sort of see how things go.
Absolutely.
Uh, and I'm certainly very bullish on silver dominant companies just because of the catch up trade that I think that we're going to see with the gold and silver ratio,
Agree
which
with you.
is exactly why we wanted to get you on the program.
Thank you. Well, let's chat soon, and I appreciate you having me on. That was fun.
Hey, thanks so much. I appreciate it. Have a great rest of your day.
You too. Talk soon.